Good morning, guys. So I see there were 12 of us on the call right now. I feel like we can do better. Let's see how we can
Morning,
bring
sir.
others. Morning, morning. I can see Ope, I can see Vidya, I can see Habib, I can see Daniel, I can see Simon. A big shout out to each and every one of you on the call. We've not had a call. We're supposed to have our midweek call yesterday. I'm so sorry. I was sidetracked by a whole lot of things, and I just wanted to really view where the market we're heading to and what needed to be done in respect to that. Sorry, let me just share my screen. I don't have my trading view open, so just give me a moment. Okay, someone is asking how much is my mentorship class? I am a struggling trader. Okay, so first of all, if you're new to trading, is um is a different thing entirely. I personally, for one, believe and I'm of the opinion that the reason to why most of us have struggled to actually being good traders is from the foundation. And it is a fundamental building block. It's a principle to life. Everything comes from the foundation. Everything starts from the foundation. If the land you buy to build a house is faulty on its own, then you need to create a stronger foundation. They need to be like a bigger base. If it's a waterlogged area, you have to do a DPC before you get to, you have to like raise the building up with full German floor concrete and stuff like that. So the beginning is the problem. So if you did not learn Forex the way you should have learned it, if you didn't follow through the right path fundamentally, you just jumped in, started copying signals, started trading, you didn't go through understanding what the actual basics are, you would have a problem and you would struggle most times. So that's the reason why the course I'm putting out is Forex for newbies, because I believe that is the essential building block that everybody needs to go through. If you don't go through that phase, you're going to have a problem at the end of the day. Now, in terms of mentorship, assuming you have gone through that phase, the mentorship program is going to be starting in the academy towards the end of this month, which is called From Basic to Trader. So the reason why we call it basic to trader is we believe that okay, you do not have so much knowledge, so you're still around the shallow level part, and then we want to take you from that part to a part where you can confidently trade on your own, be able to identify your mistakes, be able to identify your weaknesses and your strengths. You see, at the end of the day, there's no perfection. Nobody gets it to mastery level. The idea of mastery level when it comes to the financial markets and trading is your ability to understand self and understand ability. So understanding yourself and understanding the ability you have, then that way you can then create a strategy that works for you. You can then understand basic key concepts, terminologies, and systems that are already present in the market. Make your tweaks to them and then perfect them. So that is going to be coming in towards the end of the first month of the second quarter, and hopefully you would be present and then you can partake in it. So if you haven't, just check the channel, check sent links. You should see the link to the Academy's group. I would send that later on in the afternoon so that each and everyone can join. But if you're a newbie and you're on this call, your first run to access should be the Forex for newbies. And honestly, it's for a very ridiculous price for content that you should be getting. So I'm just going to show. Let me share my screen quickly and see. Let me share my my second screen. Okay. So this is exactly what you should be. This is exactly what you would be getting. Okay. Um. Okay. So you can see the amount of content here. So there are still links. There are still other links to other videos and materials like the PDFs and questions and everything that you're going to get access to. Okay, so you can see there's a link here too as well. Okay, so all of this is what is contained in the Forex for Newbies course. So this I'm just giving you guys a snippet of what it looks like and how you can take advantage of that. So if you're on the chat section, guys, you can kindly just tell others that the class is live so that they can all be a part of it. So let's head into the topic for today. If you have any other questions, please always feel free to come to my DM and I'll reply you as well. I can also leave my WhatsApp number for you guys so you can text me. So let me just leave that number here for you. Okay. So that's my number there. And if you have any questions or you know anything about mentorship or anything, just text it there. So let's get into the topic for today. Tariff, 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 tariff. Everyone has been screaming, tariffs. What exactly are these tariffs? And I think I have also explained this in recent calls severally. I have tried to I've tried to help us understand what these tariffs are all about and how they affect the market. Now, if you have been following, if you have been following correctly, you'd notice what happened in the market yesterday and why the market is reacting the way it is reacting. So we have Trump yesterday signing an executive order for not just tariffs but reciprocal tariffs. And I think that's the first term that we need to understand. Now, he's not intentionally slamming tariffs on countries. Okay, he's not intentionally slamming tariffs on countries. Rather, what he's doing exactly is he's reciprocating what has been and what is in place. Now, put it this way: the US isn't a highly producing country. Okay, they produce the basic necessities as to what is needed and what is necessary for their economy and for the people domestically. Now they do have a stronghold in importation of certain things like the American automobiles, okay, um, um, precious metals, oil, and these things. Those are like their major exports. Okay, in terms of domestic manufacturing, they focus more on retail goods rather than major consumption goods or large consumption goods like um um industrial things basically. So you're going to be talking of heavy duties and all of those things. They don't produce that as much. Okay. Even their phones, computer accessories, and all of these things mostly are imported, either imported or they are being produced outside the country, which means that if you're producing outside the country, in order to bring it back, you'd have to pay you'd have to pay some sort of importation tariff so as well. Now, when you look at the basis, I always use Nigeria for instances because I feel like it's very easy to understand it in the case of Nigeria, and we can from there try to understand how this affects because where you're situated in, okay, where you're centered in your domestic environment can help you understand and relate to things better. So let's use when I think was it Buhari? Yeah, I think it was during the Buhari's administration where they banned the importation of rice. Now, rice was one of the heavily imported retail commodity in this country. And the reason why that happened was it was to improve one thing. It was to improve the agricultural sector in terms of rice production to see how we can to see how they could force the rice mills in this country to get back into action to start refining our rice, and then it was supposed to drop the cost of rice because due to the prices of imported rice and this thing was too high, and then there was a lot of monopoly on it as at that time. It was to create jobs too for people, expand the agricultural sector, make rice cheaper because rice is like one of the easiest thing everybody eats in this country. So the cost of it was just expensive. Now, it is you can view it in the same manner. Now, what Trump is doing is this. He's looking and he's saying, why am I being charged this much when I'm trying to import something into your country, but I am charging you less when you're trying to import something into my own country. So if you are charging me, if you are charging me um a 65% tariff, if you're charging me a 65% tariff on on goods that are coming from my country to your own country, which is too expensive, then I should also be able to charge you the same thing. Now, similar thing happened between US and China in 2018 to 2021, when during Trump's administration, where they had the US China trade wars, where they were constantly going back and forth, imposing tariffs on themselves until it was more like you impose this tariff, I increase my tariff, you impose this tariff, I increase my tariff, until China went so much to 65%. Now, mind you, the Chinese, Taiwan, Tokyo, Japan region are heavily producers for America. Your iPhone is produced in where? Your what do you call it? Your MacBooks, your iPhones, your there's this American car. It's coupled in China too as well. Now, the Chinese people as well, the Chinese people, the Japanese people, and all these people as well, they are heavy producers of automobiles. Now, these same automobiles are driven all around the world: Nigeria, Canada, China, I say China, Australia, US, UK. They drive these automobiles, and now these other people don't, you know, expose you to high tariffs as much as you're exposing them to higher tariffs. And that's Trump's problem. And now he is looking at his trade balance. He's in a deficit because every time he's trying to meet up, he's trying to catch up. His country is not exporting as much as it's importing. And that was the same issue Nigeria was having as well. And that was something I feel the Buhari's administration too was also trying to tackle. The trade deficit was too large and too wide. Now, if you have like a very, very wide gap in your trade deficit, do you understand? You can't meet up to covering up your domestic debts or your foreign debts, rather. So the money you're borrowing, you're taking out, if you're not making enough trades to cover up for it, you can't pay off. Now, what's Trump doing? He's arranging mechanics that can help him balance out his trades properly. And since he knows that he's not producing enough to export enough, then let's reciprocate this tariff. So if you're going to be charging me 65%, he's saying, okay, you know what? I am calm and I'm fine. If you want to charge me 65%, let's strike a deal. I'll give you half of it. Let's do it at a half rating. So you're charging me 65. Let's do it at 32. So let's do 32, 32. So I'll take tariffs from you at 32% and I'll give you back at 32%. If you want to negotiate further and you feel like, okay, you can negotiate further to drop it down, then let's drop it down. But for anybody that has imposed high tariffs on me, I'm willing to settle at this point. Let's have a fair trade. But now, if you're not going to be willing to do this is the base tariff for any good coming into the country. So you have base tariffs on retail and high production or heavy duty productions at 10%. He's putting a 25% on automobile because whether we like it or not, the US are one of the highest importers of automobiles too as well. So he's saying 25%. So likes of China, likes of Japan, and all these people that are heavy producers of automobiles and they ship their automobiles to other countries. So he's saying that if you want to bring your car into China, you're going to pay 25%. Mind you, Europe too as well. Sports cars, your Lamborghini, your Ferrari, and all of those things. They're European cars, they're not American cars. Where are they most driven as well? In the US. You find a lot of people living the American dream, driving Lamborghinis, driving all of these things, and they're all driven in the US. And yet you're imposing a higher tariff on us and our own tariffs on you are less. So now he's saying, you know what, if you're going to import your cars to us to buy, because we buy more of your cars. Even the Europeans, when they want to live life, they go to the US too and enjoy life there too, and they import these cars too there. So he's saying, since we're not exporting as much as you're importing, then let's use our tariff to balance up. So pay us 25% since we're buying from you. So at the end of the day, his dynamic and sole purpose to why he's doing what he's doing is he's trying to see how he can encourage domestic production, thereby increasing more jobs for his people, thereby using the tariffs as well to generate more liquidity for his economy. And that way he can balance out. And then he can start to service the debt because, like it or not, the US is in a crazy ass debt after the COVID. So that's the whole essence. Now, how does this then affect the market in general? So what we are seeing right now is nothing. Let me just be honest about it. Nothing is happening in the market right now. I know a lot of people, financial market analysts and everybody have everything to say. I personally, very soon, I'll be certified with a financial analyst distance certificate. But the thing here is nothing is happening. Everything happening in the market now is just panic. People are people are panicking. People are trying to understand, okay, what's next? What are these countries going to do? Mind you, he signed that thing yesterday. No country has said anything yet. The only thing everybody noticed was he excluded Mexico and Canada, and he did that for a good reason, a very good reason. And to be honest, I can understand why. They negotiated behind closed doors. True that any smart country would do that. But secondly, is Mexico and Canada are countries within his territory. They are all in the North American region. They are boundaries. It's like how do I put it? It's like saying Nigeria now is going to impose crazy ass tariffs on Ghana and Cameroon. We are sharing boundaries with these people. It means that they can in return retaliate and take actions upon us that would not favor us, and it would cause mayhem for our own economy too as well. So he excluded them. Probably he's going to have a discussion with them and all of those things. But the 10% tariff on everything coming into the US still stands, even for them too as well. So how this is going to affect the market now is two things. In the long run, tariffs are going to be very tariffs are going to be tariffs are going to be very, very good looking in the long run. Sorry, give me a moment, please. So sorry. Shit, I stopped sharing my screen. Oh, sorry. Let's share screen to share. Okay. Okay. So in the long run, tariffs might have an impact if they move the way they are supposed to move, but it can become very harmful. Why? If you're I've explained this thing before, and let me just say it in the best way and easy way possible is this. When you impose tariff on imported goods, companies who rely on importation of basic materials for production would suffer. Now, this in return is going to make the prices of goods and services, or the prices of that commodity being sold, become more expensive. Because at the end of the day, a standard business is going to calculate its total cost of production. And if its total cost of production is too high, the people at the receiving end of that are the consumers. Now, if the people who are consuming these goods or buying these goods or purchasing these goods are on the receiving end, it then means that theoretically it is going to affect the consumer price index. Why? Goods will become more expensive, meaning that inflation is getting higher because now the prices of things are not the way they used to be. So that's inflation. So now you're experiencing price inflation. So that's CPI. So you then start to expect higher readings for CPI. Now we're coming back into the Forex term. Okay. So CPI now is going to get higher. PPI is going to get higher. PPI is producers price index. So the producers price index is going to go higher as well because they're then going to tell you, oh, the tariffs on imports have made things, more expensive. And who are these people? Who are the people that this is going to affect? Anything that is not domestically found in the United States is imported. So you see things like US manufacturers that rely heavily on steel, aluminum, and electronics. Their prices are going to go higher. So anything that is imported into the US is going to become higher. It's going to go higher now. So automobiles now, price of automobiles will go very high. It's just like what's happening in Nigeria too, in our clearing and duty and importation duty for cars. That's one of the reasons why cars are expensive. It's not just the dollar rate. It's you go to customs now and they're telling you that you have to pay 30% to clear. So you paying 30% now. So whoever is selling that car in the country has to add that 30% before considering his profits on whatever cars he's selling. So imagine you buying a car for 10 million and then you have to pay 3 million to clear the car. It means that when you come to sell it to the person you want to sell it for, you're going to have to sell it for nothing less than maybe 14 million, because you also have to make your own profit gain. You also have to calculate the cost of your shipping to the country too as well. So you see a car that naturally should be maybe 11 million is being sold at 16.5 million. It's not their fault. So it's the same thing that's going to happen, that's going to happen to in the US in the long run, if for some reason they don't get to a consensus to actually lower these tariffs. Imagine imagine getting a tariff of 45%. Imagine a country like I think there's this country. Let me just quickly check it on my phone. I think I sent screenshots of it. Uh there's a country that has a tariff of 90% on US goods. Let me see. There's a country with 90%. Okay, Cambodia. Cambodia was imposing 97% on the US. And so be it. And luckily that it's not like they import so many things from Cambodia as well. But imagine you were a company and having to import certain things from Cambodia, and now you're being charged because of his fair tariffs and reciprocal tariff, you're being charged 49%. That's about 50% on anything you're buying. So if you're buying a good of 70,000 USD, to clear it, you would need 35,000 USD to clear that good as import duty or tariff. And that's crazy. So you would imagine what that would do to the prices of goods. Now, to us as financial traders, this is where our major concerns are. Our major concerns are the prices of goods and services. How does it affect? How does it play a role? And even in the long term, these companies and this domestication of production that he's trying to um what's the word, he's trying to encourage in his country, does not provide enough jobs and pay enough for people to actually be able to afford other things. And this domestic product, he cannot force or in place or replace them with the imported ones for them to become more popularly accepted and people to patronize them more. Then it's going to create a gap in the economy. So what you're then going to notice is a lot of people are going to start facing what, the inability to meet up. So earnings are not going to meet up purchasing power. Just exactly what's happening in Nigeria and in the case of Nigeria. And that is where you then slide in and you hit a recession. So that's where a recession is. When earnings cannot meet purchasing, that's a recession. If inflation is too high, earnings are dropping, employment is dropping, you've balanced into the average of a recession. And how does a recession automatically affect the currency? Is going to weaken the currency. The currency is going to be shit because investors are going to lose trust in the economy. If the Federal Reserve are not able to control inflation, it might lead to a hyperinflation. And a hyperinflation is one of the leading indicators for a recession, meaning that inflation is too high and employment is too low. So that's hyperinflation. So in a short term, aggressively, what's going to happen is if we see inflation numbers move higher, the Federal Reserve is going to come in to control inflation. And what they would do is to keep investors' trust by by strengthening the currency. So what they will do is hike interest rates to keep investors into the market. Now, investors who are going to be in the market, mind you, are not going to be long-term investors or specifically heavy investors. They are going to be aggressive investors. Aggressive investors are people who want to take opportunities in those little increments. So if you go from 4.5% to 4.75%, the aggressive investors who want to quickly take advantage of that 0.25%. Those are the ones that the Federal Reserve are now going to constantly use to keep their economy afloat. They are going to constantly use to strengthen the currency. Because if inflation is high, naturally, what should happen to the currency is the currency is going to lose value. So that's why they always hike interest rate to make sure that they can keep the currency afloat. Because if they don't do anything, the currency is just going to keep sliding. And they don't want that to happen because that overall is going to place them on a bad scale in the international system, trade system. Now, another thing that could happen to the global economy in terms of this whole reciprocal tariffs and this thing is it could shift the global supply chain because the US companies are part of a global supply chain, and the tariffs will distribute its flow, increasing the cost of components and finished goods. So let's take for instance now, let me look at the back of my phone. Let me see if they still write it like they used to. So if you look at the back of your iPhone, I think if you still use, I don't know if it's on the newer iPhones, but I have a 7 Plus here. If you look at your iPhone, you see that it is designed by Apple in California and assembled in China. Now, what this is going to do, it's going to affect even the cost of things like your iPhone, because now, in order for them to assemble it in China, the parts and everything is bought from China. So anything you're buying from China or you're assembling in China comes with the same tariff because you're not importing it. It's the same thing that happens to our oil, and that's why when we are buying, we export fuel and we export crude oil and we buy petroleum. Do you understand? We buy premium PMS, premium motor spirit. We buy PMS. That's the same thing that happens. We don't have a refining plant. We don't have a proper refining plant that can refine as much PMS that is needed in the country. So what is happening now is we're exporting crude oil and then importing PMS. So it's the same thing that is going to happen to the US companies are that are they have subsidiaries in other countries and have to import back into the US. So take for instance Apple now. Apple will finish designing in California, then go to China to go and assemble. Now, in order for them to bring it back, there's no waiver. You're importing, that's importation. So now you're bringing it back. So imagine what that could potentially do to companies like that in the US. And if these companies are all companies that are high consumer based companies, imagine what that would do to the prices of their goods and their services. So now you see that the CPI already, as I'm talking, if you already have an understanding of CPI that I've explained over time, you can already see how the CPI index is going up. The prices is just shooting and it's following it. And the only way this can happen is if at the end of the day, there's a consensus and agreement that makes these things better, or else the Federal Reserve is going to take the hit of this thing. Now they have to constantly control this inflation. And in return, we're going to constantly see an interest rate hike. If the interest rate gets too high, a recession is coming in gradually. So how can we pace ourselves now in this market? And this is where I want us to pay attention now. How do we pace ourselves in this market? Let's look at the DXY. Let's not talk too much about the theory. Let's look at the charts. This is where a majority of people are focused on. Can you see what happened to the DXY yesterday? Can you see exactly what happened to the DXY yesterday? Remember, I told you guys that we were at this key level here. We're at this key level here. And technically, the one thing that you should have seen from the market is you can clearly see the market shifting structure here technically. Everything was set up for these buys. We have this huge area here. If you go to when you look at it on your daily, we have this huge area of inefficiency here from the market, which naturally should have been filled. But now the markets are saying, you know what? Why should we think that the dollar is bullish in any way? From everything stated so far, we can clearly see that it's not going to favor it's not going to favor the economy, not anytime soon. We need to see actionable traits and characters start to come forward for we to have an interest in the dollar. So what we are going to notice heavily now is safe havens. So this is the time where you start to pay attention to things like CHF, JPYs, even AUD for now is going to be a bit tricky because the AUD is a heavy commodity. See things that you don't want to play with. AUD, NZD, you don't want to mess with them because they are commodity countries. Gold and oil, they are commodity countries, so you don't want to play with them. But if you're looking for something that should give you a bit more stability right now in the market, you should be looking at things like CHF and JPY. Now, why are this? These are economies with a very, very low interest rate. They have little to no economic disturbances. So when you look at pairs like the JPY, so let's look at pairs like the JPY. No, not the JPY futures. Let's look at Okay, so let's look at the JPY index, for instance. Now, this is the JPY index, for instance, now. And I already had views. I knew for a fucking good fact that anything happens, this thing is going to go bullish. Sorry that I'm using cursive words. Okay. But I did expect it to come a bit lower, but it didn't. And that was because, things changed in terms of the dynamics of the market. But now I have clearly seen that, you know what, we've shifted, we've shifted bullish again in terms of structure. You can see we had this sweep on liquidity here at this point here. And then now we have a take on buy side too as well. So now we have a take on buy side too as well. So what we're going to be looking for now is for prices to pull in a bit. And then now we know that the JPY is going to be a hedge for us as traders against the dollar. Why? The dollar has a lot of uncertainty around it now. You saw how stocks crashed over the week. From last week, we had this pullbacks, and then the market is still crashing. Now, what does this mean for stocks entirely? Now, investors are going to get wary when it comes to stocks because, first of all, how are you going to keep up? Is there going to be concerns in terms of our earnings, our monthly yields and returns and all of this is what's going to happen? So now there is question and uncertainty everywhere. Everybody's asking question. What happens to your company? Okay, you are Tesla. Tesla, for instance, now is an automobile company. Yes, it has its plant and factory in the US, but it's a big importer of steel and aluminum too as well, because they don't have all the steel and aluminum in the US. See, the whole reason to why the international trade system exists is it comes from the understanding that at the end of the day, no country can stand alone because you don't have everything. Even if you have it, it might not be sufficient enough to go around domestically. So there will be a need for you to import and to export, and that's why the international trade system exists. So if now I have to then pay so much to import these things, it's going to affect the cost of my production. So if your Tesla S used to cost about 68,000 USD before, think of what your Tesla X is going to cost when they impose a 40% tariff on materials that they import before. It means that two of these things are going to happen. Either the companies take the hit and actually try to play under budget to make it affordable for people, which at the end of the day is going to affect their earnings and their yields, which in return investors are scared of. Because remember, as an investor, you are not just investing to make money, you are investing in the total well-being of that company. Although there was an insurance policy in 1978 that made sure that investors are not liable for companies' mistakes and whatever happens to them. But nonetheless, the company is responsible for protecting your principal and your capital at the end of the day. But if they are not earning so much, it then in turns means that you're not earning, because the law was only safeguarding investors from bankruptcy and any litigation issues that companies had. But in terms of earnings, there's still that void there. If the company is not earning as much, your investment is not going to produce as much for you. So these are like the major things that investors are looking at now. So everybody's being very calculative. And you can see now people are just taking off their money small from the market. And then this is where they are putting all their money into. I think I'll keep teaching you guys this thing to the end of the year so that by next year, everybody's just going to get it. This is where everybody's putting their money into. I want you to study, to look at something comparatively. Okay. Look at this trend. Okay. And then let's go back and then look at this trend. Do you see a similarity or a difference? Can you see that while stocks was crashing, gold was buying? So people are moving into something that is safe. Now I'll give you another instance. While stocks were crashing, look at what was happening here. Can you see? Can you see people selling all their dollar into the JPY? Why? Safety. Everyone is looking for safety. Look at what's happening to look at what's happening to uh look at what's happening to the Euro JPY. See, we're getting more sales, and what's happening here? More sales are about to come in again. But now the reason why this is hanging on here is because one, the euro hasn't said anything yet about retaliating. They are still calm, and their inflation numbers have been doing quite well. Their inflation numbers has dropped, so their currency is actually gaining more strength. But then when you look at things like USD especially, you would see more of this. When you look at JPY GBP JPY, you notice a slide too on the GBP JPY from last week. Market just stopped and it's starting to slide back down. But USD JPY is going to take more of the hit this time around, and you can already see it happening because the dollar is no longer a safe haven at this point in time. Do you understand? The dollar is not a safe haven at this point in time. So anything the dollar is going to slip like, to anything safe haven. So look at USD CHF. Okay, let's look at USD CHF. You'd find the slip. Can you see? Can you see why I said the only things well you should be looking at more on now CHF and JPY. Those are safe havens. You don't want to like go out. So personally for me now, I had plans on trading GBP JPY, Euro USD, but the Euro USD is chaotic at this point in time. It has gone maniac. See, I personally was waiting to say, okay, let's break above and this thing, but you can see how everything is slipping right into the CHF and the JPY. So these are like the major safe havens, and then you're going to see more of gold buys. But the truth about it is why I haven't focused on gold was I was waiting to see to what extent the uncertainties are going to get to. Because it is bad for you as a trader to chase a market that is at an all-time high. So you want to find the market at lower points to engage the market. You just don't want to jump in when there are too many bullish candles. Because imagine people who are jumping in at this point in time, trying to buy, and then these sales happen. So I personally now want to look for an opportunity to buy gold again, but I want to find it at a suitable price, and I need prices to come back to 3,050 again. I need prices to come back to 3,050 again. I need to see 3,050 because what Trump's tariff has basically done to us now is it has made us understand. It has made us understand that there's still uncertainty in the market. People are still scared of the dollar. People don't know what is going to happen to the dollar. So people are still going to do what? Are still going to want to hedge against the dollar to save havens. So anything that can help them hedge against inflation, they are interested in it. They don't want interest rate now. They want to preserve their money. So that's what people are looking for now. Everybody wants to preserve their money. Now, would they just jump in and buy at any position? No, they won't just jump in and buy at any position. Rather, what they would want to do is to buy at a lower price. Everybody now is waiting for 3,050 and then they'll jump in more on buys. So we'll see 3,050, we'll see 3,000 level again. These two places are areas in the market where most people are going to be focused on 3,050, 3,000 level, and then we'll see more buys within the second quarter. So position yourself, set yourself, get your capital ready, hit me up if you're thinking of okay, this is your time to eat and this is your time to blow up and this thing, whatever the case, just hit me up and I would guide you through processes on how you can actually focus on what you need to focus on in this period. But right now, this is what we are focusing on. We're going to be scouting opportunities to actually do what? Shit this dollar with the market as well. So what am I looking at? I'm looking at USD CHF and I'm looking at USD JPY. And these are things that I'm going to be focusing on for the second quarter. So very simple analysis. And that's the truth about this thing. The market is going to move very simple analysis. One thing you should be looking out for now is patterns. Focus on patterns. When you see the market start consolidating, know there's something wrong. Go back to your fundamental analysis. Go back and read the news. Go back and understand why is this market happening the way it is happening. And that's the same thing. You see that consolidation, that's how you know that something was happening in the market. So now what we're going to be looking for is we're going to be looking for a return to that level. Okay, we're going to be looking for a return to that level, and that's where we're going to join in. We're going to join in this trade. We're not just going to go in. Um, we're not just going to go in aggressively. We want to focus on the market to present us with opportunities, and when we get opportunities, we're going to go in tactically and calculatively as much as we're going to try and maximize the profits that we're going to make. So USD JPY, USD CHF, I will send out my outlook for that. I have to step out now. I have an engagement to do in town. So when I'm back later on in the evening, I would analyze USD CHF and pan out a long-term view on where prices could be heading to. And one thing about market is you need to understand that market is, let me just do this quickly for us. Always focus on supply and always focus on demand. And then while you focus on supply and demand, always remember that something drives the market, and that's liquidity. So for as long as liquidity exists, fundamentals will push and demand is going to be met while supply is being received. Okay, so we definitely know now that we're heading for this point in time. So let's catch this trend all the way to this point, and we're going to scale in at every point in time. So I'll see you guys later on in the evening when I send out my analysis, and then we could even have a chit chat in the chat section. Until then, guys, as always, it's Ryan for a reason, baby. So just leave me a message. You have my WhatsApp number. Leave me a message if you want to get serious, and you can just also tag me in the chat section, and I'll reply your messages. Okay, guys, thank you so much for joining, and I hope you enjoyed the session, and I'll get your feedbacks from the chat section. I'm running late. That's why, guys.